Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Jim, good to be back on the show.
John, one of your Discovery Watch companies and also a show sponsor traded up a big storm last week. Does Aben Resources have a real new discovery?
Aben has encountered something very special on its forest care project in the Golden Triangle, but its tonnage implications are still an open question. But it is a high-grade gold story of a sort we haven't really seen for this project. The market reacted very positively to high grades, pushing the stock from below 20 cents on Thursday when it put out the news, and trading in the 30 to 40 cents. And ironically, with the 100 million or so fully diluted shares, the Aben Forest Kerr project has almost the same value as Ron Netolitsky's Skeena Resources, which has been in this relentless downtrend all year as it drills off the twin zone on the SNP project and also recalculates the C-zone resource on the SK Creek project they optioned from Barrick. And similarly, we've seen GT Gold put out initial results, and it's now trading at 50 cents or so for its saddle discovery on the Tatoga project farther north in the Golden Triangle. So you ask yourself, why is Aben trading up a storm when everything else seems to be fading away? Today, we saw gold get pushed below $1,200. So that put a little bit of a pall on Aben in the morning, but it has bounced back and it's trading very strongly. Now, what is it that's interesting about these new results? Last year, when we talked about when we introduced Forest Kerr as a Discovery Watch project, they had encountered some interesting intersections in the north boundary zone of this Forest Kerr project, which actually consists of 3 claim groups that they stitched together. It covers a 50-kilometer trend north-south straddling the Forest Kerr Fault. Now, the Forest Kerr Fault is a deep crustal fault to the west of which are older rocks that aren't as prospective for mineralization, and to the east are younger rocks that are very prospective for mineralization. And the theory that the Aben's VP of Exploration, Cornel McDowell, has developed is that while that fault itself is dead, splays off it could end up hosting significant mineralization, similar to what we see with these Abitibi greenstone belt faults like the Cadillac Larder Break, which itself doesn't have anything in it, but it's the splays off it that contain all the gold. So what the company reported was that this first hole had 4 very high-grade 1-meter intervals of gold that ran between 1 and 9 ounce per ton within a 61 to 86 meter interval. And these 4 intersections were spaced 20 to 60 meters apart. So it wasn't just getting some high-grade snippet. It's the fact that they seem to have gotten these parallel zones that has gotten the market excited. Now, 230 meters to the south, back in 1991 when Chris Graff's Extel Mining owned this property, and this was in the height of the SK Creek area play, it had it under option to Noranda, and it had this big wide-spaced regional program, and it managed to hit a snippet of a half meter of 326 grams per gold. And that's 9 ounces or so of gold. Very, very impressive. But Noranda didn't really follow up because it was looking for bigger zone, bigger tonnage systems. And you can get these little high-grade snippets here and there, but they do not really get the market excited. But when you get a series of parallel ones like this, then the market starts thinking maybe there's something more going on. And the fact that 230 meters to the south there is this old hole that has a similar high-grade snippet, this has got the market excited. Now, they're not quite sure what type of system this is. There are silver and copper values, but they're considerably less important than the gold values. They are describing it as mesothermal, which is important because mesothermal deposits, you can get very high grades, structurally controlled, but they can have substantial vertical length, as opposed to an epithermal system where the depth of the system tends to be constrained. The Saddle discovery is an epithermal gold-silver system, so it is different from this. The problem with this area is that it is all busted up. It has very complex geology. They think the splay that hosts this mineralization has a northeast-southwest orientation, and in fact, these holes have been drilled from the northwest to the southeast to intersect these structures. But the reason we cannot yet completely call it a brand new no-brainer discovery as opposed to a possible flash in the pan is they do not yet understand the geology. They have 7 more holes that were already completed when they reported the results of the first hole. You can see this gold mineralization. It is visible in the core. They haven't really described any visuals on the other holes, but I have a suspicion that there are more visuals. But they want the complete assays for these holes, and then the key is to match the geology logs with the mineralization to try and understand what is going on. What is the orientation of these zones? They had several pads that they drilled these holes from within a sort of a 100 by 200 meter footprint. The drill is off on another part of the property right now because they want to make sure they have a good understanding of where to drill the next holes. I suspect the next holes are going to be ones which are more designed to help stitch together the geology of this system so that they can start saying, we see where the controls are. Here is now where we need to do close space drilling. Now, when you look at this sort of 100, 200 meter area, you think, okay, maybe all they have are these shoots of gold, parallel shoots, not a lot of strike length. But when you consider that this is supposed to be mesothermal style mineralization, and very high grade, and you start thinking of kind of like the Red Lake camp mineralization, you can build a lot of ounces in a relatively small footprint. So what's coming next is going to be a lot more drilling. They'll have all the results in a couple weeks, and then they'll go in there and hopefully demonstrate that we have a new camp of very high grade mesothermal gold mineralization. It's going to take a lot of brute force drilling to stitch it all together, but there could be a very valuable prize, not necessarily huge tonnage size, but still variable in its own right. But interesting, 2 kilometers, stretching 2 kilometers to the south, they have a gold, copper, and silver soil anomaly, which is basically unexplained. So they could have to the east of this forest curse fault, a number of these splays that repeat, and if the whole area has been pumped by the same fluids, they could end up having something much more substantial than just this particular area in the north boundary on this project. Now, one of the problems looming in the next few weeks is that the financing for this program, which was done in late April, flow through between 12.5 and 18 cents. It comes free trading, and that's about 18 million or 15 million units that come free trading. So the market's going to be having to digest this. But given the heavy volume that we've already seen and the fact that instead of the stock popping up, churning a huge amount of stock and then fading back again, it is now back close to 40 cents trying to break into new high, that tells me there's an appetite out there that's buying this stock and keeping it, even though the algo traders are in there churning it all around. The bigger issue is 26 million warrants between 5 cents and 18 cents that start expiring at the end of this year, though some of them run all the way into 2021. Now, the problem with these golden triangle plays is the seasonality. You can work with reasonable costs until late October, maybe early November. In the past, this particular area would have been difficult to prepare a winterized camp for. Today, the construction of the Bob Quinn airstrip next to the highway has made this particular area of the Forest Kerr project much more accessible than it has in the past. So a big question for the company is, by the time we start reaching October, will we have a good enough picture of the size and scale of this new discovery to justify a winter drilling program? And the normal strategy for these warrant holders will be to okay, here we go, here's the pump with some flashy results, we short sell into it in the market, and then we sit back and let gravity and this general bearish market take these shares back down, and then we'll just cover our short and keep the warrants for next year's seasonal play in the Golden Triangle. Well, that may not work, because this discovery may have the substance to it to justify a winter drill program. But the company also has Plan B and C, which should give these warrant holders a reason to think that, maybe we should, if we do go short, we may be forced to exercise those warrants. And if all of them got exercised, that would give the company an extra $4 million, which would put it in great shape for next year. At the start of this year, they were supposed to drill the Chico project, which is in Saskatchewan, south of the Fisher project that SSR has optioned from Taiga Gold. It's in the midst of an 18,000-meter drill program. Also doing something similar, chasing splays off the Tabinor fault and hoping to come up with high-grade gold. The Chico straddles this fault in the south. They were about to start drilling this year when the local native group suddenly stood up and said, whoa, we don't want you to do this. And so they had to pull out because they didn't want to get into a fight. They thought everything had been agreed upon. And it turns out there was some sort of political kerfuffle that has now been resolved, and there's a very good chance that come this January, they will be able to go in there and start drilling. And by then we should know if SSR has delivered joy for Taiga Gold Corp on the Fisher project, that indeed this Tabinor fault, as it stretches south from the Santoy and then the deposit which SSR acquired through its acquisition of Claude Resources, if indeed it is fertile all the way to the south, and that could create some excitement there. And then, of course, there is sort of the wild card. Aben owns the Justin project. They haven't really done much with it, but it sits next door to the Three Aces project of Bill Sheriff's Golden Predator. And Golden Predator jumped up to $2 at the start of 2017 when they also got some very flashy, high-grade results, but it's also been almost in a relentless downtrend and is now 30-40 cents a share. And apparently they are drilling very close to the border of the Justin project. And as Jim Pettit jokes, I think the missing ace is sitting on the Justin project. So we'll see if we suddenly have justification next year to go to work on that project also. So I think the stars are lining up for Aben. It's nice to see these high-grade numbers. The market really respects high-grade numbers. We do need to get over this hurdle that these may just be very small zones. And this now becomes a game for the geologists to think this all through. Is this like the SNP zone, high-grade SNP zone, which Skeena is working on, that the market doesn't seem to care about anymore? And if so, do we have the strike to develop a lot of ounces? Or is this going to be something like the Valley of the Kings, which Pretium has developed, which also has spectacular high-grade gold values? It remains to be seen, but certainly this is an emerging discovery, not a definitively no-brainer discovery, but one that I think will keep the market excited between now and late October.
We'll have more with John Kaiser right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. please visit our website at rmroyalty.com.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're speaking with John Kaiser. John, it's now 3 weeks since Peregrine Diamonds announced a friendly takeover bid from De Beers at 24 cents. The meeting to approve the deal takes place on August 31st. What are the chances that a better offer might show up?
Well, Peregrine Diamonds last week filed the information circular for that meeting, which is intended to approve the deal and make it a fait accompli. And after reading the background to this transaction, I have diminished expectations that a white knight will come and make a better offer. It appears that in early 2017, the company signed confidentiality agreements with 2 or 3 other companies that were interested in the project, and so these companies got access to the data. And then around July, De Beers showed up and said it was interested. And at the time, the talk was all about, a possible joint venture. So De Beers signed a confidentiality agreement. And then in November, another company signed a confidentiality agreement. But when January rolled around, it turned out that all these other companies had lost interest. And De Beers showed up and said, we now are seriously interested. In fact, we're not interested in a joint venture. We're interested in acquiring the entire project. And so the De Beers put forth a 20-cent share offer in April, but the company didn't really want to deal with it because they were still working on the updated PEA. They had published an updated resource, which told you that, well, the PEA is definitely going to get better because they've brought more tonnage out of the target for future exploration category into what can be used in the PEA calculation. So they kind of held off, and then the PEA came out in May and showed this project was worth $679 million Canadian. And the stock at the time was sort of 15, 16 cents with its 440 million shares outstanding, valued at about $65 million, a fraction, less than 10% of the value implied by the PEA. And they needed to do another $27 million of work to deliver a pre-feasibility study. And when the PEA came out, De Beers ended up increasing the offer to 24 cents, declared this as the final offer, and so the company had to decide what to do. And they're looking at their diminishing treasury. They go and contact one of the other groups that looked more serious, and that group didn't say they weren't interested. They just said they can't do anything at this time, which means there was probably some other transaction that was keeping them busy. And so finally, they decided to accept this offer. It has been locked up, and there is an exclusivity deal to this also, which prevents Peregrine Diamonds management from even discussing a possible alternative deal with anybody else. So if a white knight is to show up, it has to be of a hostile nature. And De Beers also has the right to, within 10 days, to match this sort of the bid. So who is capable of paying cash? Well, I've mentioned in the past the Washington group of companies, which now owns Ecadie, but the rumblings on the street is that they're more interested in shutting down diamond exploration and doing reclamation work than starting new diamond mining projects such as Chidliak on Baffin Island. Then there's the question of Rio Tinto, but Rio Tinto, it has 60% of Diavik. It's done a deal with Shore Gold, which is now called Star Diamonds, on the Fort de la Corne project, and that's sort of a big, large-scale type project. It probably is not interested in a smaller-scale operation such as Chidliak. And then you could think, well, maybe Alrosa, the Russian diamond producer, might be interested. But then you have to ask yourself, why? Why would Alrosa, which owns all these diamondiferous pipes in Siberia and other parts of Russia, in the Arctic environment, why would they want to take on a project where permitting is not a function of Putin's will? So I don't think they are a candidate. The only candidate that I think really is left and that has a definite reason to make a competing bid is Lucara Diamond Corp, which is the largest shareholder of that is Lucas Lundin, who probably rivals Robert Friedland in terms of net worth and success in the resource sector. Earlier this year, Ira Thomas took on the role of CEO when William Lamb stepped down. Her friend, Catherine McLeod Seltzer, has also joined the board. They have the Corot project, whose open pit life will be coming to an end. They are looking at the underground development of Corot, which could extend the mine life to 2036. Its only asset is the Corot deposit at this point in Botswana, and this is the one that produces these 1,000-carat Type 2A diamonds that are absolutely stunning. So how do they grow this company? They've got this blockchain strategy that they acquired from Ira's group for about $30 million called Clara, where they want to make a kind of a tracking platform. But that's not really going to build value for the company. There's other groups doing similar stuff that will be competing with that. Their option is maybe go and acquire other African projects. But given that Ira Thomas has her roots in Canada, and right now there really isn't a good proxy for, say, Canadian institutions in the diamond sector. You don't own Rio Tinto for its diamond mining operations. Dominion Diamonds is now gone. Nobody in their right mind would own Mountain Province for its Gaucho Quay operation, where the diamonds aren't particularly pretty. Stornoway, that's really a Quebec charity case that has had this unfortunate problem of breakage in the Renard operation, which diminishes the value of the output. Nobody really wants to make that the vehicle for Canadian diamond projects. So Lucara, to me, makes a lot of sense for it to make a paper bid. But the problem is 47% of the stock has been locked up, and 43% is owned by Robert and Eric Friedland. And they would have to agree to tender to a bid, and it would have to be a bid that's probably 50 cents versus 24 cents. De Beers is probably not going to offer 50 cents cash, but the Lucara would also have to have the support of the Canadian institutional audience for this acquisition, so that the stock doesn't go down after they announce a paper bid. If anything, it goes up and drags the value of it higher. So in my view, the only chance for this sort of a white knight arriving is for Lucara to decide to make a hostile bid, and it doesn't have to require the Friedland's approval. There's always been this mumbling about privatization. If the market doesn't respect us, we'll just privatize it. And they really would have had a hard time doing that at a cheap price where they squeeze everybody else out. But what if all Lucara does is aim for 50% of the company, and the Friedlands stick with their interest and become private partners with Lucara in the development of the Chidliak project? It's a partial privatization. They would own 43% of the subsidiary, and they would put in their money to develop this. And sometime down the road, when Lucara is on its feet and has various assets going, and the Chidliak has shown itself to be a lot more than it is right now, they could sell that 43% back to Lucara for stock. I don't think this will happen. It is a possibility. I think De Beers understands that the Chidliak is a valuable asset whose potential goes well beyond the 2 pipes that are in the PEA. It is going to wrapping up the Victor mining operation. They decided not to go underground because the grade is too low, but it has really good diamonds. Snap Lake has been shut down. Gaucho Quay has been a disappointment in terms of the value of the diamonds that it has produced. So this is a brilliant move for De Beers. $114 million is what it's paying on a fully diluted basis. And they're on into this project, $100 million has been sunk. And the work done by Peregrine Diamonds has been absolutely top-notch. They used very solid people. The money that went into this project was well spent. So De Beers is in essence paying $14 million for the value that has been added and as a result of the $100 million already put into this project. So I think it's disappointing that this project disappears with just a 24-cent price, but I think it'll end up in very good hands, and Chidliak will turn out to be a significant new diamond mining district in Canada.
We'll have John Kaiser's final thoughts right after this.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with John Kaiser. John, Nevada Exploration announced a private placement on Friday afternoon to raise $1.5 million at the lowest price the stock has been since the junior underwent a 10-to-1 rollback back in 2015. Is this a sign of the times, or is the search for Nevada's missing gold a bust?
I think it is more a sign of the time. This market, the resource sector, the big companies, it is selling off, and the juniors, except in unusual situations where you have very high-grade results, such as we talked about with Aben and its Forest Kerr project. For the market, the glass is worse than half empty. It is almost empty and draining away. And in fact, the attitude that seems to be emerging is that this is almost like summer of 2008, when the liquidity for resource juniors completely evaporated, and the big markets didn't take their hit until Lehman Brothers was allowed to fail in September of that year, unleashing the huge financial crisis that took the Canadian resource juniors even lower until they started to turn around in the first half of 2009. So usually you don't put out good news on a Friday afternoon. And, raising $1.5 million would seem to be good news, but when you saw the price, 12.5 cents, which is about as low as the stock has been since Dennis Higgs took charge in 2015 and organized the rollback and refinancing, since that period, he has raised $4.4 million at prices of 27.5 cents to 40 cents through his network of people. And his network of people turned out to not really be his brokerage firm contacts. One of the things that really puzzled him was that while he could talk to his German contacts and they would love the story and they would be in, when he talked to Canadian brokers, he didn't get really any traction. And the problem with the whole Canadian brokerage mentality is that the trend is their friend. If there's no trend, then they will not buy it. When Dennis launched the Urinerts Energy, over a decade ago, the uranium bubble was already underway. So pitching the story to brokers who already knew this is what they want, that was easy. Telling them that here was a new exploration methodology, gold in groundwater, that was the key to finding the missing half of Nevada's gold endowment. They didn't want to hear about it until there was proof of concept in the form of a discovery made. So one of the problems with the Nevada exploration strategy has been that of the 6,000 samples that they collected in the past 15 years all over northern Nevada, these were largely done with the geoprobe, which only furnishes a two-dimensional image because the geoprobe, you hammer it down as far as it goes, you collect the water sample, and then you measure the gold and the Pathfinder, Carlin-type Pathfinder elements in it, and then you plot them up and you sort of see what the plume is. And they realized that this wasn't creating enough granularity, and that really sort of hit home in early 2014 when Rob McEwen's company, McEwen Mining, which had this strategic alliance which would have carried NGE for a 30% interest to a production decision. In the Grass Valley project, they had this nice anomaly. They drilled it on what they thought was a gravity low, which meant that the rock was less dense. In fact, it was less dense because the bedrock was deeper. It was a downdropped block of rock, and of course that meant the upper plate rocks that you don't want for a Carlin-type discovery. It ended up deeper, and so they drilled this one expensive hole that delivered nothing but upper plate rock with nothing in it, and McEwen pulled the plug on this and left. So in 2016, after the reorganization, NGE came up with an additional innovation to figuring out the protocols of properly measuring on a reliable basis gold in groundwater. They retrofitted a truck with an RC rig, and they call it the Scorpion, which allowed them to drill down to about 150 meters, collect water samples at every level, and also collect the alluvial material near the bedrock interface, which can often hide or host a lag deposit that's been laterally displaced from the source. And they can penetrate probably 6 meters into bedrock and get the chips and assay them for the geochemistry and also to log the geology so that they can actually create a map of the bedrock under the gravels of Nevada's basin. And for the past 2 years, they've been doing this. That's where most of that $4 million went to. And now they have two projects, Kelly Creek Basin and South Grass Valley, which have far more information contextualizing the target, justifying the target, than poor Rob McEwen had when they had the Grass Valley. So the South Grass Valley play is ready to be drilled. They know that there are lower plate carbonates under the gravels. They have seen the geochemistry, the alteration of it, so it isn't just a massive limestone, which is no good for Carlin-type deposits. You want the silty, dirty type of limestone that has the iron-rich sediments, which provide the iron for the pyrite that's created through the sulfides in the brines that carry the gold and then form this Carlin-type system. So they have an extraordinary target developed. It's completely blind. Kennecott drilled one hole into it in 2000 before it packed up and gave up on Nevada. That hole, they don't have assays for it, so, and obviously since they didn't follow up, there wasn't anything fantastic in it. But the logs show that yes, these are altered carbonates, lower plate carbonates, and it's offset from where the golden groundwater anomaly sits within this part of the basin. So when you look at how many places a Cortez Hills equivalent deposit could be hiding within that area, it is very easy for one hole to simply not tagged anything. And the fact that there might be nothing in it is actually a plus, because in these systems you're often looking at the depletion of the surrounding rock, the nothingness in it, but the fact that fluids flow through it means that the gold in that wasn't just left behind in all kinds of places. Sort of an example of if there's a lot of smoke, there probably isn't a fire, because the fire has got to be intense in these systems, and it won't have left a lot of smoke in the surrounding rocks. So this is a fantastic target, but the market has been a relentless seller for the past couple of months. Almost 4 million shares sold from 25 cents all the way down to a sort of 12-cent level. That seller seems to be finally gone, but with the whole market deteriorating, the dog days of summer here in August, the company decided to bite the bullet, go for $1.5 million, 12 million units with a half warrant. That is exercisable at 30 cents, and there is an acceleration clause if the stock manages to trade for 10 days above 50 cents. So it's not one of those clip and flip type financings where you just wait for 4 months, blow out your stock. And apparently the $1.5 million is pretty much spoken for by some new strategic investors. But $1.5 million doesn't really do the trick. The company has been in negotiations with various producers for the past year on these projects, but hasn't been able to get any of them to bite. And so the company's now reached a crossroads where Dennis Higgs is saying, why should we do some horrible deal where we give up 25 or give up 60, 70, 75% of the company to some major who's going to spend several years spending a few $1 million, take their time doing it. Why don't we just damn the torpedoes? If there is demand for more than $1.5 million, let's just do it here. Let's go to $3 million. Let's start drilling South Grass Valley. And we don't even need a barn burner discovery hole. All we need is evidence that there is gold mineralization in the bedrock in this part of the valley. An interesting thing is, after they did the Grass Valley sampling in the northern part of Grass Valley, NGE in that sort of 2013-14 period went for its own account, sampled all the way down the valley until its end, and basically they got zero values from almost every location except in that southern end. So they are pretty confident that when they get these gold and groundwater anomalies supported by the Carlin Pathfinder elements, there's something going on. And in this case, it's an area that has never been drilled. There has been drilling on the peripheries, but the peripheries are where the lower carbonates outcrop. They're not altered, and there's really no reason to expect anything in there. But here, away from the edge of the basin, is an anomaly, a target, one of the most interesting targets, blind targets, geochemically supported that I have ever seen. And so I think it's just a function of the bad market, the negativity out there, but the company is taking the step to raise the money, to take the dilution hit. And even if they end up doubling it to $3 million on the same terms, they'll have $107 million. A Cortez Hills deposit would be worth about almost 2 billion Canadian at today's gold price. So the prize here is substantial. If they get lucky and find something similar, this is the sort of discovery type of play that the market wants. It won't care if we have a big general correction in the market. It will focus on the junior, and it'll run all by itself.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Gandhi.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.